To grow our capital markets, I think first we need to raise the level of savings, because the weakness of our savings culture and base is very evident now, because foreign investments, rather than supplement the investments in the stock market, has become the driving force for our stock market, and it shouldn't be so. I think if we are saving enough and the level of savings in the economy is strong enough, we should be able to drive our capital market and then have it supplemented by foreign investors. And when we are talking about savings, we are talking about both institutional savings as well as personal savings. I think there is also a need for the government to understand that the business of creating a savings pool in Nigeria is the business of everybody, not just the operators, but also of government. Because you cannot drive economic development or economic growth without creating a savings base to drive the economy. In economics, they say savings is equal to investments. And that means that for you to have savings that will transform into investments, you must create those savings. And if you have domestic savings at the optimum level, it'll help you a great deal. The second aspect, because you see, it's both an issue of supply and demand. If you have savings, there must also be users for those savings. And the kind of savings you generate will depend on the type of investments people will make. If everybody is investing short term, the people who need the money can only get short-term money, and therefore their activities will tend to be oriented towards short-term transactions, trading. But if you truly want to develop a productive economy, manufacturing, infrastructure investments, agriculture, mining, where you need to make a lot of capital investment, a lot of long-term investment, then you need to create another type of savings. And the type of savings you create in that case will be long-term savings. And that is why the pension reform was very critical to the growth of the economy as well as the capital market. Unfortunately, because government is borrowing a lot by issuing a lot of bonds, a lot of the money that should go into the private sector is being borrowed by government. It would be nice if government were borrowing and you can trace every borrowing to infrastructural development, because that is part of the investments you need to be able to develop and grow a productive economy. But I'm not so sure that is so. I think a lot of our borrowings are also supporting consumption, which is unfortunate. So what do we need to do? First, I think government needs to reorder its priorities. The cost of governance must be reduced. The portion of our budget that goes to capital projects must increase, and we should reduce the recurrent expenditure. That means that public sector investments will increase. Infrastructure investment by government will increase. The private sector can supplement that, but the private sector should not be left alone to do infrastructural development, because there are certain places, certain projects that may not be economically feasible, but socially desirable, because social investments must still be made by government, not necessarily by the private sector. Two, we must create an environment in which the productive sectors of the economy can grow. We must reduce our penchant for imported goods and produce more of the things that we consume, especially things that we have resource base for. Because there is no point for us, talking about unemployment when we have clay here, but we decide to import somebody else's clay in form of ceramic tiles. We have quartz sand, we decide to import somebody else's quartz sand by importing glass. Those are things that I think we can do. We have competitive advantage because we have energy. We have gas. So some of these things, we can turn our gas, use our gas to transform the things we need. Now that the price of oil is down, that is even more compelling. We must use our energy resources to transform what we have naturally here, not only for our own consumption, but for the world.
Now when we look at, finally, because we're looking at the capital market, from the government side, fiscal and monetary policy plays a very critical role. Mr. Bismarck says monetary policy itself can alter the well-being of the people.
Can alter
the well-being of the people in terms of, if not.
Yeah.
So what would be your expectation in that regard from the governance aspect, in terms of fiscal and monetary policy that can also mobilize the capital market to be well positioned to help the
government? You see, the fiscal policy must be in alignment with the monetary policy for you to have optimum results. Yes. The monetary authorities cannot be pursuing an expansionist policy while the fiscal authorities are going the other way. It will conflict, but they must work in measures that will not be dysfunctional. And you see, let me give an example. If you say you want to attract investments, both domestic as well as international, the monetary policies must, for instance, you must promote an economy where you have minimum inflation. Because when there is inflation, you destroy value of capital, and nobody wants to invest long term. Everybody is short term in orientation. And you see, when you have inflation also, and there are other economies that have lower inflation, the chances are your economy, or rather your currency, will depreciate over time. And people will move money out of your economy. And it doesn't have to be whether you want to attract money into your economy. Even the people who are resident here would like to protect their capital. And unless they can get returns that can beat inflation, they'll move their money somewhere else. And that is Nigerians. Now, and Nigerians have a greater stake here. Yes. So if you want foreigners to come, no foreigner wants to come in here when he knows that 6 months down the road he may lose the value, he may lose his capital. Not because he has not invested well, simply because of the interplay of exchange rate. And those things are important for everybody. So if we say we want to encourage investment, we must act in a manner that is consistent with what a rational investor will do. And of course, to go back to my argument, if you create a productive economy and you create savings, you promote the accumulation of savings, both institutional and individual personal savings, you will create, the environment for people to come and use those savings for productive ends. And there will be no point coming to set up manufacturing outfits here if they know that the policy, the fiscal policy within the environment encourages import of the same thing or dumping of the same goods from other markets. So, and those are the areas in which we must work and ensure that there is adequate incentives for savings, there is adequate incentives for investment and production within this economy. Otherwise, we will not have a viable economy. You will not have a growing economy. If you don't have a growing economy, you have unemployment, your capital market will be small, and of course, there will be mass unemployment and poverty.